The EURUSD just hit our target at 110, but is the pullback over? That's what we're talking about in today's video. I'll also have the latest on the DXY. So if you guys have seen recent videos, you know about the sweep above this high from back here in December 2023. Okay, so this was the high back there. We had the sweep above this, the failure to hold above it, and the retest last week during NFP. So the idea here that I discussed in last week's video was to look for a short opportunity on a retest up here of this red box between really 111.10 all the way up toward about 111.40. Which you can see here that we did on Friday. We got a sweep of this area up here, a retest, and a return to the 110 area, which was my first target following that short idea. Now, the reason that this worked out, and I've talked about this before in recent videos, but when you get a sweep to one side of a key level like this, what happens is there is liquidity that builds above highs like this up here, and markets seek liquidity. So what happened is the euro was seeking that liquidity, and orders got filled up here in this area. And by orders, I'm talking not retail, but institutions filled their orders up here. And that's why we saw the rotation lower. Now, there was an imbalance that built up right around 111.40, hence the retest on Friday. Also non-farm payroll, which we know tends to be a volatile producing event. So this right here, guys, if you caught this move, this was about 130 pips down here toward the first target. Now, a lot of people seeing this for the first time will think that, okay, this is time to short the euro. However, this is where timing comes in because this right here is not, in my opinion, the area where you want to be shorting this market simply because the euro is now coming into support at 110. So the short idea was back here, right? If you missed this, then in my opinion, you're probably better off just holding off, staying patient, and waiting for the next opportunity to come. Now, for the euro, what that could equal is either a retest up here into this imbalance, because we know that this candle back here gives us an imbalance in the market somewhere around 111, potentially even a little bit higher than that. So a return to this area up here before a resumption of this pullback, or you wait for that sustained break below 110. Now, the tricky part with playing a sustained break below 110 is that you have this area down here right around 109.50 that is going to serve as key support. So that's not too far below current rates. So if you're trying to play a breakdown from 110, you've got to be careful with that. Personally, I always like to look for shorts higher up, right? You want a short high and long low. Look, having been a trader for over 20 years, I know how difficult it can be to find a trustworthy broker. And that's why I'm excited to share with you the broker that I've trusted for 7 years now. I've even met them in person. So I would literally trust these guys with my life. And that is Blueberry Markets, where you can trade over 300 instruments in the Forex market, share CFDs, crypto CFDs, commodities, and also indices. Plus, they have 24/7 support, so no more waiting forever for replies. You can get help no matter where you live. And funding your account or withdrawing from your account is super easy and quick with options like MasterCard, Visa, bank transfers, and Skrill. But don't just take my word for it. They serve over 50,000 traders who can use platforms like MT4, MT5, and their web trader. And they have stellar reviews across sites like Trustpilot and Google. So click on the link at the top of this video or see the link in the description. And when you use my link, you are going to get a 30% deposit bonus. So if you deposit $10,000, they're going to give you $3,000 to trade with. With trusted support, hundreds of trading options, and unbeatable reviews, Blueberry Markets is the broker for you. So with that in mind, what I would be looking for is potentially over the coming days, and we might not get it until next week too, keep that in mind, but looking at the 4-hour time frame, you've got this area of consolidation right through here. Okay, so this consolidation back here on the 4-hour, you can even see that it goes all the way back here to about August 19th or so. So we have this area back through here. Now I'm going to make this resistance. Okay, so this is the area that I would keep a very close eye on if we get a move up here, because what you'll notice here is that there is an imbalance up here based on this 4-hour candle right here. So through this area, and also this 4-hour candle just above. So right around 110.80 is the region that I would watch here for the EURUSD to potentially return to, okay, and then look for shorts up here in this area. Now, personally, I would not look to buy this simply because we have this confirmed fake out above that December 2023 high and also the top of this channel. And like I've said recently, whenever you get a fake out like this up here, okay, what you often see from markets is a return to the opposite side of that pattern, which means for the euro, we're looking at a move potentially down here. So I would not look to buy this simply because we have this fake out up here that occurred. So for me, at least, and I can't speak to everybody, but for me, I am looking for shorts only here. And currently I'm looking at 110.80. Okay. I think that, return to this area, potentially even 111, like I said, could be appealing for a short for that move down toward 109.50. Okay. Now let's take a look at the DXY, the US dollar index, because that is also going to obviously matter for the EURUSD. And this is one reason why I think you've got to be a little bit careful getting too bearish on the euro and even the pound, is because the DXY, what we've seen here for the past year and a half, over a year and a half, is this channel right here. Now, we saw a breakdown from this, okay? You can see the low right here, and low here. We saw a breakdown from this structure back in this area, and so far we've seen range-bound price action from the DXY. So we don't have a confirmed bullish reclaim from the US dollar. So this is really, really important if you're trading the euro. Don't get overly bearish just because of that fake out above that December 2023 high, because so far we have not seen the DXY reclaim this area between 102 and 102.6. Okay, so the DXY for now is just a range-bound market. All right, so this up here is still going to be key resistance for the DXY, which could line up with 109.50. Keep in mind that this area up here could line up with the EURUSD down toward 109.50. So this is going to be resistance for the DXY, support obviously coming in down here at 100.6. Now, if the DXY were to reclaim this area up here, okay, get above this over the coming days, then that right there would be massively bullish, in my opinion, for the US dollar, because it would show that this entire move was one big fake out from the DXY. Okay, so no confirmation of that yet. Again, 102 to 102.60 is going to be resistance here. All right, so again, I think that for the euro, if we see a sustained break below this area around 110, then it would open up areas like 109.50, which again could line up with the DXY around 102.6. Okay, so personally, guys, I am bearish on the euro while below 111.40. But as always, like I said at the beginning of this video, timing is critical, right? You can't go out and just look for shorts here with the EURUSD coming into support. You either got to wait for a move up here into this imbalance to try to short higher up, or you're waiting for that sustained break below 110. Now, before I sign off, let's take a look here at the pound. This is kind of a bonus in today's video, but I talked about this yesterday. In fact, we've talked about this a few times before the market even did this. But yesterday's video, guys, what I told you is that this right here, this failure to hold above this 2023 high, also the failure to hold above this parallel off of these highs, was bearish for the pound toward potentially 130. And obviously we had US CPI come out today, which was mostly in line with forecast numbers, although month over month did come in a little bit hotter. So that's why we're seeing the US dollar strengthen. And notice what we got here today. Okay, perfect retest off of that level I've showed you guys. And we got the move down here into that first target around 130. So this move right here, if you caught it, was over a 100 pip gain. So, kudos to you if you did follow along and catch that move. But just like I mentioned with the euro, though, you've got to be a little bit careful now with the pound coming into these highs back here right around 130. But with that said, like the euro, I'm going to remain bearish on this market while it holds below this area around 131.40. Subscribe to the channel and click the bell for notifications. Don't forget to join us in VIP. Claim your 90% off lifetime access. See the link in the description, or if you're on the website, click on that join VIP link. Trade well out there, and I will talk to you again tomorrow.